Hey, it's Mike Belfor, and I have been getting a lot of requests in regards to down payment assistance programs. So I figured putting together a full presentation outlining what down payment assistance programs are available for buyers in California. It may be a tremendous help for a lot of people. So without further ado, let's take a look at this PowerPoint presentation I put together. That's okay. And so just a little bit about me again. I've been in this industry 20 years. I received my bachelor's and master's degree from Liberty University in Virginia. I've been ranked as a top producer, ranking within the top 1% of mortgage originators in the nation by several publications. I funded over $1 billion in total funded volume in my career. Been the vice president or vice chair of the American Association of Realtors Government Affairs Committee. Been a non-rep member, founding member of YPN chapter, among other things. Really focused on community efforts and helping people in a community, which is why I personally love down payment assistance programs and what they help people with. So there are down payment assistance programs. Of course, CalHFA is the one in the last couple of years. A lot of notoriety because that Dream for All program came out. However, things have been around for a while. Down payment assistance is essentially funded by government agencies, private foundations, or local charities. And then buyers will still finance their first mortgage through a bank like ours, right? Doing a conventional FHA or VA loan. And then this would give them down payment assistance, essentially assistance for the down payment, or even in some cases towards closing costs. Now, these are three main that we're going to go through. CalHFA, we're going to look at the Dream for All program, because that's still something that is currently, as I record this, on pause, but coming out again. And then we're going to look at the Shinoa Fund and GSFA Platinum. So what is CalHFA? CalHFA is the California Housing Finance Agency, which has been established in 1975. It's a state's affordable housing lender, collaborates with local, state, and federal government agencies to provide first-time homebuyers with down payment and closing cost assistance programs. Their mission statement is investing in diverse communities with financing programs that help more Californians have a place to call home. Now, one program that a lot of folks kind of have been overlooking lately, because that Dream for All program, is the My Home Assistance, or the traditional CalHFA home loans. This is a first-time homebuyer program, which does have an income limit. However, some CalHFA programs do not have income limits. However, this one does, and it's essentially for a first-time homebuyer. What qualifies as a first-time homebuyer? Someone who has not lived in a property that they have owned within the last 3 years. So if you have a rental property you have not lived in, property perhaps you inherited or out of state, that's a rental. You haven't lived in it in the last 3 years, you qualify as a first-time home buyer. So give you up to 5% towards down payment and closing costs. It includes a silent second with no monthly payments. This is good for a single-family home, condo, or townhome, and you can do buy downs with this particular program. The minimum credit score for FHA is 660, conventional is 680, and the higher your credit score, the more lenient the program is with your debt to income ratios. As an example, if you have a 700 credit score with an FHA CalHFA loan, get up to about 49% in some cases if the system approves you for a CalHFA down payment assistance home loan program. 49% debt to income ratio. Essentially what debt to income ratio is, it's a gross amount of monthly income that you receive versus what you spend on a monthly expenditure. Now, just a little tidbit, maybe a bunny trail sorts, but American Pacific Mortgage is honored to be awarded the #1 CalHFA lender. We do a lot of these things. We like to help people in their communities and get them into properties, and this is a great way to do it using government-sponsored entity or down payment assistance. Now, the My Home Assistance, as we get back into this particular program, has their rates, as you see here, standard rate lock. This is just a screenshot we took from their website. It will show essentially what the rates are daily. Anybody could access the CalHFA rates to see what rates are and what things look like on that daily basis. And as you can see, it's a snippet of what things looked like just last week when we took that snippet. Now, you can see the comparison between a purchase price of $850, not using down payment assistance, and of course using down payment assistance on the right, allowing for down payment assistance with 3%, allowing for essentially a silent second to help the buyer acquire the property. Now, we look at the CalHFA My Home Assistance further, we can see essentially, again, a comparison of what that looked like and showing that, the out-of-pocket expense would be that much less, because if you're getting down payment assistance, the requirement is to put 3% down. If you didn't have down payment assistance for conventional or 3.5 FHA, this could give you that portion or a portion of that to assist with that down payment amount. In the market that we're in right now, it's ultra competitive. However, there are times where the seller will also give credits for closing costs, and we have seen a few of those as well. Now, a big question we've been getting a lot of is, what is this Dream for All program? This is also part of CalHFA. It's a down payment assistance program. It's available again for first-time homebuyers. You can use it jointly or in conjunction with the conventional first or FHA mortgage. Conventional is really the way to use it because there's no mortgage insurance. And essentially, you would have to pay back the 20% down payment that you get upon the transfer, payback, or sale of the property, plus a share of the appreciated value to that. Now, this actually shows essentially, as I mentioned, summary, right? So up to 20% down and no borrower funds are necessary for down payment. Now, the debt income ratio would be 45 to 50% based on credit, just like the other program that we had just gone over. It's owner occupied only, and the loan must be below the high balance limit for that county. So if you're in certain counties, like if you're in Orange County, if you're in Los Angeles County, if you're in San Francisco, Contra Costa, Alameda, Marin County, the max loan amount is $1,089,000. So it's a requirement to have that loan amount less than that. Now, there are income limits on this program, and the property types must be a single family or one unit residence, which may include a condo or a townhome, right? This is, again, available to first-time homebuyers, which again has not owned a property within the last 3 years. Now, no mortgage insurance is required if 20% is used towards down payment. Now, if you decide to do 10% down and use a portion of that towards closing costs, you could essentially do that as well. You get up to 20%, however, through this program. Now, this program was available last year. And one little thing I like to share is this is based off of the income limits of the area. And if you want to get this is a flyer, I can certainly send that out. But this actually shows kind of what the income limits were in that particular county as this program was available last year. Now, keep in mind, this program went quick. It was available March 27th and it was gone on April 9th. It's because this was an allotted amount that was funded through the state of $300 million. Now we're only having $200 million in the second phase of this particular program. It's going to be done a little bit differently. And that's with a lottery system, which a lot of people are overlooking, but it is part of a lottery. So essentially, how does it work? Well, the time of refinance, sell of home, or completion in 30-year term, the homebuyer must repay the amount of the 20% plus any appreciation of that loan thereafter. Now, this is, of course, the 20% is a no interest loan. It's not forgivable, but it is a program essentially that must be repaid at the end of its term. Now, this is an example, right? So we have the Dream for All provides a loan for 20% of the purchase price. The homebuyer pays back the original loan amount plus 20% of appreciation in the value of the home itself. So you kind of see what this actually looks like as far as a graph goes. Now, example 2, essentially it shows a reduced amount. This reduced amount is essentially based off of the transaction itself, plus any 50% of the appreciation of the property itself, depending on what the borrower's income level is using the Home Ready Lookup tool. So if they have a low income, the amount is actually less because, of course, this program is really catered towards those that have, the income requirements or the restraints and inability to purchase property, using this program essentially helping them. Now, this kind of gives an idea of what a conventional loan versus a Dream for All program may look like, and just gives a summary based off of a $450,000 purchase price. If you have $450,000, you put 3% down, it's $13,000. Closing costs, rough estimate, 2 to 3% of the sales price. Expected cash you close is $22,000 to $27,000. With this particular program, you get 20% down, and expected cash to close is anywhere from $9,000 to $12,000, similar to the other CalHFA programs candidly that we had gone over earlier. The next program is going over the Shinoa Fund. This program is pretty cool. There's no income limits. You do not have to be a first-time homebuyer. Down payment assistance is up to 5%, and there is a forgivable option and a repayable option, and it allows for a minimum credit score of 600 for your FICO score, and it is FHA only. Now, keep in mind, This is similar to our Golden State Finance Authority or GSFA program, which again, does not require you to be a first-time homebuyer. It gives you assistance up to 5.5%, and this can be used towards down payment and closing costs, and can work with a FICO scores low as 640 and above. This is good for 1 to 4 unit residences, condos, townhomes, and manufactured properties. Works with FHA, VA, USDA, and conventional financing. Does have an income limit of $182,000, depending on your county area. And another thing to remember is, again, this is required for primary homes. Most of these down payment assistance programs, in fact, all of them, require it to be a first-time home buyer in a property that they plan on occupying as their primary residence. A little bit more on this GSFA program. There is more incentive if you are someone who is what we call a community servant. This would be medical and healthcare, law enforcement, firefighters, paramedic, and EMS, fire support staff, teachers, school administration. Gives a rough idea of what this would look like as far as, a comparison, if you will, or just kind of a breakdown of what this looks like as far as what your out-of-pocket costs would be with the Golden State Finance Authority program as well. And it shows that you have this item called a gift, and depending on your rate, the rate could go up, but you get a larger gift for that amount. So as you see, 7.125 doesn't offer down payment assistance, but if you go to 7.25, it offers down payment assistance in the form of 3.5% of that loan amount. 7.625 offers 4%, just as a breakdown or kind of a rough idea there for you. Each one of these programs requires homebuyer education. So one of the occupying first-time homebuyers must attend this particular thing. It's available online, in person, or virtual. The education can be free in a lot of cases, but other cases, it's $100 usually to do an 8-hour course and speak with a home buying counselor that's HUD approved for the particular program itself. Any questions on any of this, let me know. But the best way to get started is, of course, complete an application, take the online education course, and we'll find your dream home. Now, keep in mind, if you do apply and want to see what figures look like, usually within 24 hours of that application, we'll jump on a phone call. Number one, look at what you're qualified for as far as your limit, but then also finding out what things look like as far as your budget, what makes sense for you financially, what are you comfortable with? We'll work through that for you and making sure that whatever we do gets you the best qualified transaction for you. But always here to answer any questions you may have. So feel free to call, text, or email me. Or if you'd like to follow my Instagram, I post all sorts of things, especially in regards to first-time homebuyer programs. So feel free to follow me at mike.belfor on Instagram as well.